Thank you for watching the CEO Barbecue. My name is Antonio, and today I'm taking you with me all the way to Idaho, again, where I'll be looking for copper. Joining me on the barbecue today is Chris Paul, the CEO of Hercules Metals. Before we get into it, though, I would like to warn you that we have not received monetary compensation for the production of this video from the company that's being interviewed. Please understand that this channel is a business that sells content producing services to companies, which means you cannot rely on this video for research and you should treat this as an advertisement instead. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. Please only watch this if you know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, so before continuing on, please talk to an investment advisor with a good long-term track record because your capital is at risk, and I am neither a licensed financial advisor nor do I have a good long-term track record. If you're not 100% sure you understand 100% of the disclaimers I just showed you and told you about, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Hercules Metals is listed as BIG, so that's BIG, on the TSX Ventures Exchange, where over the last 3 months, an average of about 320,000 shares have traded daily. The stock's 52-week high is $1.03, and its 52-week low is 46 cents. With a market cap of 140 million Canadian dollars and 255 million shares outstanding, today this is a 55-cent stock. There are 5 million options and 14.5 million warrants outstanding, as well as close to 3 million RSUs, bringing the number of fully diluted shares to about 277 million, meaning an increase of give or take 9% in shares outstanding can be expected if all dilutive securities get exercised, which would then result in about an 8% ownership dilution if, and that's always a big if, but if those actually get exercised. Insider ownership here is recorded at about 4.5%, and that is, of course, or will be, of course, a topic of discussion later on, with Jupiter Asset Management owning about 3% of the shares outstanding, and the Commodity Discovery Fund owning about 5.5%, while Barrick is recorded as the largest shareholder here at just over 13% ownership. The effective date on the last officially filed interim financial statement is September 30, when the company had about $15 million in current assets, 4.5 million of which at the time was recorded as cash and cash equivalent, and about 10.5 million was recorded as short-term investments, mostly in the form of CIGs. On the other side of the balance sheet, I saw a total of $2.8 million in liabilities, and that's total liabilities, all of which was actually account payables, so there's no long-term debt. The 9-month period that ended on September 30 this year costed the company just over $16.7 million that was recorded as expenses, although that does include about $1.5 million worth of share-based compensation, as well as a small amount of depreciations, which, when excluded, results in $15.3 million total cost, partly offset by about $1 million gain from foreign exchange and interest on the investments that I told you about earlier. Exploration and evaluation expenditures represented about 86% of that expense at about $13.1 million in total, and 94% of that $13 million went to exploration drilling, so it actually went into the ground. G&A sat at about $2 million for the same 9-month period, which is give or take $220,000 per month on average, with about 60% of that cost going towards salaries, wages, consulting fees, and professional fees combined, whereas the marketing cost represented at about 15% of that overall G&A. I've got two ratios for you here. First of all, the exploration to administration ratio sat at about 6.6 or 87% or 86, depending on how you want to round it up or round it down, in favor of exploration. And then I have the actual drilling to marketing ratio, which sat at about 44.5, meaning 44.5 times as much money went to drilling as did into marketing. Please understand that I am not infallible, so I might be making mistakes in my reading and interpretation of these numbers, so it's safer for you to head over to setterplus.ca for yourself and make sure you're getting the full picture. For Hercules, that full picture is fully focused on Idaho and specifically on Western Idaho, where they were initially looking for silver when the company was still called Hercules Silver back in 2023. But then they stumbled upon a copper porphyry belt, with the discovery hole getting a lot of attention in late 2023 and pushing the stock price up significantly, which is something we'll talk about, and we'll try to separate fact from fiction later on in the conversation. But Chris, this is your first time on the barbecue. So first of all, thank you for taking the time to talk to me here. But there's a couple of obligatory questions that we have to get through before we get into the actual interview. But who are you, and why do you think you're the right man for this job?
Yeah, thanks for the opportunity, Antonio. Yeah, as you've introduced, my name is Chris Paul. I'm the CEO of Hercules Metals now, formerly Hercules Silver. Why am I the right man for the job? Well, it's maybe we kind of get into a little bit of the backstory of how this all came together, and then how I actually got this job to begin with. So I'm a geologist. I live in British Columbia, so most of my background was in BC, actually up in the Golden Triangle. So my first public company, was a company called Golden Ridge Resources, where we had an old Barrick gold epithermal property, which we made a porphyry copper discovery on in, I think, 2017 or 2018. So that's interesting what Kingfisher is now taking forward on drilling this year at the Williams project. But ultimately, I was VPX at that company. The CEO decided to move to Newfoundland when the kind of gold rush was happening there. We parted ways. I actually went down to Idaho. So that my move to Idaho had a lot to do with jurisdiction, politics, sort of challenges with permitting and other problems in BC. And so I actually met a guy named Curtis Johnson, who was working with a company called EMX at the time and had staked a whole bunch of stuff for EMX. And so I thought this stuff was really interesting. And again, another company I was working with had taken an option on 3 of these projects, which Curtis had staked. Long story short, that lasted about a year, and the CEO left. I was being introduced to another project at the time called the Hercules, and I thought, wow, this is a pretty interesting silver project. There's lots of historical drilling. There was a shell at the time. I mean, kind of a shell. They were called Bald Eagle Gold Corp. They had this gold asset in Nevada, and it just wasn't working. And so basically what happened, long story short, is the big shareholders, the guys that put the deal together, came to me. They said, listen, you're looking at this Hercules property. Like, why don't we work to get this thing vended into Bald Eagle? Because this thing just, we like it. We like Hercules, and we'd love to just put this deal into Bald Eagle. And so, I basically said yes, and little did I know that would take about 18 months of my life. It was a very challenging vendor that we had to work with in Vancouver. He was, not a mining background, but we ended up, all said and done, we bought this thing for $375,000, about 100%. We bought it outright for $375,000 in cash and stock. So we got it for an absolute song. There's a 1% royalty on it, right? 2%, we can buy it down to 1 for $1 million. So basically, I think that was about end of 2021. We finally ended up putting that deal together. And they said, look, you got to run this thing, man. Like, you know this thing better than anyone. You're, I guess, we think of you as a good geologist. Give it a shot. And so, I didn't really have a capital markets background, and still agreed to do it, essentially. And I don't think I was the man. I didn't think I was the man for the job, if I'm being perfectly honest. But I thought, what the heck, we'll take it on. And got started working. We were able to raise some money with Crescat, I think, as you know, which got us basically going with the greenfields exploration. And really what I wanted to do was just basically, okay, so there's 308 historical holes on here, but what's going on, right? What's the big picture here? There's never been any modern systematic exploration that's been done here. So let's do what we do best, which is soils and mapping and geophysics and all the kind of greenfield stuff, because that was really my background too. I had a services business I'd built in BC, which we sold to Gold Spot in 2020. That was called Ridgeline Exploration. And so using that kind of background of being kind of greenfields, generative, That's what we did for all of 2022. And lo and behold, the porphyry targets start showing up on this thing. And so, we were able to, I was able to go to Canaccord, raise $6 million to test these targets. Really it was kind of a combination. Like, obviously there's a lot of silver here. There's a, historical resource here. That's going to be the focus. That's going to be what backstops the valuation here. But there's a really interesting porphyry target that we want to test. And so ultimately, they believed us and they gave us $6 million and we made the discovery in 2023. It was the fifth drill hole on the back of that financing. So very long-winded way of answering your question, why am I the man for the job? But hopefully that kind of makes sense, right? And really, if anything, it's my drive and my passion for discovery and I think proven ability to make greenfields discoveries.
I like the story. It's essentially I wasn't the right man for the job, but I feel like I'm becoming it right now, and I appreciate you being kind of
Yeah.
upfront about it or explaining it how it is. And we'll talk a lot about what you've discovered here later on. Insider ownership is at under 5% according to your latest presentation right now, though. So I want to talk about that first. How much of that is you personally, and what's the average price you've paid for those shares?
Good question. I would guess, I think, judging by your detailed intro, I think you actually know the numbers more specifically than I do. I would say probably most of that 5% is me. I believe I own around roughly 9 million shares.
Mhm.
What is the cost on that? It's very low. It's very low, right? And the reality is, this gets back to that 18 months spent putting the deal together. A lot of things that people don't know. I don't think I've ever mentioned this publicly in any sort of interviews before, but I spent close to $150,000 in legal due diligence. We were going to put this thing in a different shell at the time, which ultimately became a company called Highlander Silver. That's a whole other story. That's a can of worms I won't even open up right now. But they backed out and they basically left me with this $150,000 legal bill, which when Bald Eagle came along, they said, look, we don't have cash, but we can basically give you some stock and we can make you right? And so that plus the 18 months it took to put together, there was an RSU grant, a big RSU grant for that, right? And so there, the cost base on those is zero, right? At the end of the day. So, subsequent to that, I have participated in every private placement for really what I can. At the end of the day, I'm not rich. I'm just a geo, but I have participated in every private placement. So for what that's worth, my average cost base is quite low. But at the end of the day, it probably doesn't matter what my cost base is, right? Because I'm in this thing to make a discovery. I'm in this thing to make money off of, hopefully a future takeout, right? Like I'm just as incentivized as anyone who's paid for their stock. This isn't a lifestyle company. I think it's pretty clear this isn't a lifestyle company, right?
Why the average price matters to me is because I'm thinking about incentive and your counterparty's incentive in finance is one of the most important things. So that's something we'll definitely get to here in a second as well. Is Hercules your only job right now, though, or do you have other positions, either private or public?
No, Hercules is absolutely 100%. It's been my entire job for the last 4 years.
You mentioned that there's a royalty on the project. Do you or any of the other executives or directors own any of that royalty or any of the other royalties on the project?
So there was some claims staked originally to the east, quite a distance to the east, which I have a 1% royalty on because that was part of the original vend that was done way back in 2021. So I do have a small 1% royalty to the east, and the other 1% royalties with the vendor on basically the core package of claims. So the core package of claims is, I think if it should be on maybe some of our older presentations. I don't think it's on our latest presentation, but basically there's roughly 2,000 acres where the company actually owns the surface mining rights to the land. And so that was what was purchased. It's where the historical silver resource was. It was where all that stuff was. And so what we had done back in 2021 was we had while this was going on, while this deal was going on during that 18-month period, we'd gone and staked some claims off to the east. So this is actually long before I'd been asked to be CEO, and so we'd stake these claims to the east and vended those in, and so that was obviously part of the reason for the share-based compensation.
Hmm. Wait, is that royalty that you own, is that buyable?
Is that sorry?
Is that buyable? I mean, can
Is
Hercules
that
buy that?
viable?
Yeah.
Yep, they can buy half. So they would buy half, leaving me with 0.5%.
Okay. What's the half cost?
$1 million.
Okay, a million. And you said 9 million shares, 55, that's about 4.5. Okay. Just trying to figure out incentive. And that's, I mean, part of the reason why I ask that is because I'm trying to understand what your incentive is and how important this investment is to you personally, which you've partly touched upon from the perspective of time and effort, and of course, but also money. So what percentage of your portfolio would you say is invested in Hercules right now? I mean, these 9 million shares, is that a big part of your investment portfolio, or what does that look like?
95%.
Okay. So yes, it is a big part. With the stock price going down from what about a dollar 60, I believe, on the back of the excitement after the discovery hole in late 2023, to it's now under 60 cents. At what point it was under 50 cents actually, not too long ago. Why haven't you been buying in the open market, and do you expect to do so in 2025?
I own 9 million shares, right? So there's already a lot of stock I own. And so, why wasn't I buying it at $1.60, or why am I not buying it today? Or
Well, you're not buying it today, given how much cheaper it is than what it was.
yeah, I mean, I own 9 million shares. Like if I was, look, if I had a ton of money in the bank account, maybe I would be buying tons of shares. But I own what, close to 5% of the company.
Hmm.
Is there really a need? If there's more private placements coming up in the future, yeah, maybe I'll participate in those. But yeah, I don't think I really need to just go into the market. If anything, I should be selling stock, right? Like at the end of the day, we're all in this business for the same reason, right? We're all investors, right? Like I'm an investor just like anyone else. So, if something represents 95% of your portfolio, would you really think it's wise to go start buying more of that stock? Or, maybe you want to sell some of that stock and diversify a little bit, right? Like, if we went and asked my wife what she would think I should be doing, probably wouldn't be buying Hercules, right? Like just being honest, right? Like trying to portray this, because I know a lot of people want to see insider buying, right? Like where's the insider buying? But if you really think about it logically, um, it doesn't really make sense that CEOs should necessarily be forced to always be insider buying just because the stock's dropped.
Yeah. It is absolutely an interesting topic, and one that we've tried to cover in depth in various conversations. And there's always different opinions on it, so I can appreciate your view on it. Talking about the stock price having fallen from $1.60 to 50 now, where is all this selling pressure coming from, by the way? I mean, but by the shape of the volume, it looks like it was a very strong wave of excitement that pushed the stock from somewhere in the 20-cent range, I believe, to again over $1.60 at one point on the back of that discovery. And now the stock has kind of consistently been falling since then on lower and lower volume too, despite you having what looks like a consistent news flow. You've done metallurgy, which we'll talk about and whatnot. So have you managed to identify who's exiting here?
No, no, and this is a stock that's, there's a few institutional names in there, but it's dominantly retail held. So it's all over the place. Like it really is. So there's a company, we use Generation IACP. I think we pay them about 3 grand a month roughly. And they basically, they have this bracket report and they kind of look at all this information, right? Who's buying, who's selling. But really at the end of the day, it's just kind of coming from all over the place, right? And it's kind of just noise. So I think the most valuable, thing that you should really be doing as a CEO, you can try and worry about who's selling, but generally speaking, if people have decided they're going to sell, they're going to sell. It's better to focus your mental energy on trying to bring in new buyers. Because if people have, let's say your average cost base is, 20 cents, right? Like that was what we did the countercord financing at. It's it's probably wise for a lot of these people to be taking profits, right? Just kind of like we discussed earlier, right? Like that's the whole point of this game that we're doing is we're trying to buy low and then sell it higher, right? At the end of the day. And so, to answer your question, it's kind of coming from all over. There's really no one, big name that's just dumping the stock. It's just people take profits, and 2024 is what it was. It wasn't our greatest year yet, but I think we ended it pretty strong. So, yeah.
That's exactly what I was getting at. Is it one kind of party trying to get out of their position or not? You mentioned that it's retail dominated your share registry essentially. Is that something you want to change? I mean, is 2025 the year where you go and look for more institutions or stronger backing, if you will?
Yeah, we're always you always do want stronger institutional backing. Like retail held stock is going to be very volatile, right? You know how that works. Whereas institutional guys are, they're way more sort of long-term oriented, right? They're less shaky hands. So when you have a rough patch, let's say in the company, very less likely to be lots of selling pressure. So yeah, for sure, it's always a focus to try and bring in more institutional shareholders, and it's just something we just always work on going forward. I think for institutions, obviously, it has to be an institutional quality story, right? So usually they like to see you getting up towards that resource level, which when we were doing marketing to institutions at the beginning of last year, I think we only had 5 drill holes down. So it is a tough thing to do, right? At the end of the day, because big is an exploration story, right? We have obviously an extremely strong exploration story, but it's an exploration story.
That is something that I want to talk about toward the last or second part of the conversation, maybe third, when we're talking about budgeting. I want to talk about marketing and where you go to find that stronger institutional backing, but we'll get to that in a second because this is more or less what I call my smell test before we get into the actual barbecue. Let's talk about the asset now, and let's maybe talk about. I understand your history with the asset, but maybe we can talk about the history of the asset itself. Again, you initially set out to look for silver, but you found what you believe is an intact copper porphyry, essentially. So, talk to me about what work had been done on the asset prior and by whom, as well as, and really the thing that I'm mostly interested in here is how did everyone before you miss a porphyry in Idaho?
Yeah, that's a really good question. So there was a whole bunch of silver mining that sort of happened throughout this district, turn of the century era. So sort of late 1800s through to 1920. Actually, there's a property we have under option as well called the Mineral. So it's about 14 miles southwest. And there was actually a small smelter on that thing. There's a small town, like there's old houses and buildings and apple trees and stuff. It's wild, right? Like so this was a lot. There's a lot of silver mining going on here back 150 years ago. Um, and then that stopped. I think it stopped around 1920. And so what happened is in 1965, the area, this sort of core area what I was talking about earlier, where we own the surface rights, this was all private land. It was owned by a ranch called Nixon Ranch. And so a company called, well, let's just call them Anglo Beaumark, which is our subsidiary now, which we purchased. Their predecessor company was a company called Kismet Mining, but they essentially became Anglo. They did a deal with the ranch, and so ultimately it was an option deal, and they earned in on that option deal, and the ranch ultimately deeded them all the mineral rights that they owned to the land, as well as the right to use the surface for mining. So you can build a mine here if you find anything. You build a mill, and that's obviously got all kinds of other crazy benefits that we can talk about. So that was in 1965. And so that company basically sort of on and off from 1965 through to 1984, so about 20 years basically, they drilled 308 holes. And so there was a little bit of other work, like they did kind of little bits of soil sampling, but they did a little bit of IP, very shallow IP. So ultimately, why didn't they find the copper porphyry? So number one is they were all focused on one specific geological unit called the Hercules rhyolite. So for whatever reason, all of the silver is confined into one specific rock called the Hercules rhyolite. It's a bit of a head scratcher why. It's a weird kind of quirky epithermal silver deposit. So all of their exploration stayed focused on the Hercules rhyolite because that's kind of where all, everything been done for the last 100 years. What they didn't realize is way off to the east, which is where we ended up doing our soil sampling, there's actually an outcropping, a daylighting part of the porphyry system, but you can't see it because it's all covered. There's very little outcrop exposure over there. And so back in the day, if you didn't have outcrop exposure, if you couldn't see it, there wasn't really much chance that you were going to find it, right? Because they didn't do sort of modern soil sampling with 51 elements and, like we do today. And the crazy thing is, one of the final things they did, so they drilled up until 1984, 308 holes. They put the small sort of silver resource together, and the price of silver crashed, right? It actually crashed around 1980, this big Black Thursday event, but they couldn't raise any more money and they couldn't keep it going forward. So they gave up, but they did come back in, I believe it was 1987. They came back and they ran an IP survey right over where we ran our IP survey. But back then, they didn't have the power, right? So they kind of use these like low power, low current surveys. So the current wouldn't go down that deep. And so it didn't go down deep enough to pick up the sulfides associated with the deeper porphyry system. Now, when we did our IP survey, which was in 2022, we'd seen this big copper anomaly, right? Because we basically said, okay, well, let's not just do what they did and stay totally within the Hercules rhyolite. Like, let's try and figure out the bigger picture here. Because really, this was one of their faults. They really didn't understand the big picture. They didn't, really understand what was causing any of this silver mineralization. We wanted to understand that. And so we got this copper anomaly in gold and moly, but we didn't even really have, because we only had the crest cap money, which was, I think, $2 million that we'd raised. And so we didn't have enough to run IP across the whole property. IP is very expensive. And so we ended up just running it over the rhyolite, just like the old timers did. So we were very lucky because the modern IP is way more powerful and it can go down like in this case 400 meters. And so we get these results back, and really what we wanted was we wanted the resource. We wanted to see the silver resource lighting up and sort of extending off at depth, and this is how we're going to grow it. But we didn't get anything. So what ended up happening is it got deep enough that it could actually go down into the porphyry, and there's so much sulfide in the porphyry system that it completely dwarfs the little bit of sulfide that's associated with the silver. And so we just get this huge sort of battleship shaped anomaly at depth. And it was so big and it was so consistent that it looked like something that would typically be like, okay, this is a false positive, right? Like this isn't what we're looking for. But ultimately, we waited until the fifth hole in 2023. We had to know what this is, right? Like you got to at least stick one hole down there. And that's what ended up making the discovery. And we're like, oh, so all the copper that is lighting up over to the east. So it turns out that actually dips down underneath the silver area and had been picked up by our deep IP survey. So combination of just sort of more greenfields work, right? Way more surveys than they've done historically, and just modern technology being able to see much deeper than it could before.
Very cool story, and I appreciate you telling it as enthusiastically. I do want to talk about some of the follow-up work that you've done right on the back of that, and we'll get to that for sure. But I also know it's almost time for you to have a 2025 drill plan ready. So, well, I assume you do. Maybe you don't. Maybe you want to do a separate news release on it. I think you do. I think it was in your today's news release actually, but. Drilling in 2025, what, where, how much, and of course, when does it start?
Yeah, we don't really have those details yet, to be honest. So it's probably going to start late April, early May. It all depends on weather. So it is a bit of a heavy snow year this year, like more so than the past 3 years. I always hope that that's going to melt quickly and we're going to be able to get out there sooner. But ultimately, it's just when the snow melts. Now, we don't have a final drill plan yet. We have concepts of a drill plan, but we don't have like a definitive thing that I can put out in a press release and say this is going to be it. What are we working on right now? Well, we're working on, number one is our geological model, our 3D geological model. So I really, you saw in today's news release, it was a long one, right? Like we really went, to lengths to sort of describe, what we think is going on here, what is working and what isn't working, and ultimately it's kind of coming down to host rock for us. So there's a late mineral porphyry intrusion that's sort of come in this drilling area, and that's lower grade. And then there's these volcanic host rocks all around that, which are always higher grade. So take, hole 21, which we just announced today, and there's, 171 meters, whatever it is, of like pretty good grade. And then, it starts to drop off when it gets into the late porphyry. So what we're trying to do very accurately now is, map that late porphyry in 3D. Because we want to stay away from it, right? Like as long as we can stay out of the late porphyry, and in those mineralized host rocks all around it, the drilling is going to go a lot better. So easier said than done, because the problem is that what makes it challenging, these rocks are so altered, right? Like if you look at some of these core photos, they are just blasted. And so it's very, very, very challenging to just visually log these rocks and say, oh, that's definitely the porphyry and that's definitely, the felsic volcanics or whatever. So we can do an okay job, but really we have to wait until all the assays come in, which is now. We send the data off to a really, really smart guy. His name's Scott Halley, based out of Australia. And what Scott does is he takes your 51 elements and he can figure out, based on the geochemical signature of your assay data, this is rock unit 1, this is the felsic volcanic, this is your late porphyry. And it's only when you really have that proper lithology data that you can obviously start to model it. So that's what we're working on now, is modeling the geology. And then we can confidently come up with a drill plan that we can come out and say, yeah, like this is looking pretty good. We're pretty optimistic that the grades are going to be much better and over longer widths than they were last year, when really we didn't know much going into the season.
Again, something we definitely have to touch upon. How much money you want to spend on it, though? Is that something you know already? And well, how much money do you have right now? How much money do you want to spend?
Yeah, we got 12 million right now. In terms of how much exactly I want to spend, I don't have that exact number. What we're going to do is we're going to come up with a drill plan and sort of, more reverse engineer it, rather than say, here's how much money we have, I want to spend all this. We're going to say, here's what we want to drill. How cost efficiently can we drill all these important holes that we want to drill in our 2025 drill plan? Because we've renegotiated our contracts this year. Like we've cut costs, like insane amounts relative to last year. We've got, whole completion guarantees going into this year. So the budget is going to be, drastically better, in terms of like cost per meter than it was last year.
I saw that in today's news release. Actually, you're talking about a 50% cost saving. Um,
More.
More than, well, where's that? I mean, that's, you don't see that half price every day. So what is it? What's helping you cut cost? Like, are
No,
you giving anything up? Like, what's happening here?
no, we're not giving anything up. We just basically it's finally starting to get very competitive in the drilling realm. And we fired the core drilling contractor, we fired the RC drilling contractor, and we just basically said, listen, this isn't working, right? And we've gone out and it was a very long bidding process, and it was a very competitive bidding process. And you know what? We just had to get firm with people on certain things and say, listen, if you can't agree to this, we're just going to go to someone else, right? And so ultimately, we were able to negotiate rates, all in rates, right? So all in meaning everything is included. Fuel is included, muds are included, moves are included. You're only paying for actual core delivered to your core site. Anything else happens out there, we don't pay for it. If you lose a hole, we don't pay for it, right? So it's I think it was born out of frustration, right, from last year and the drilling challenges that were delivered to us last year. Kind of lit a fire and we're able to sort of ignite the passion in us to go out and negotiate way better deals.
Well, I can understand a discount. I can appreciate a discount, a little bit of a cheapskate myself, but this is half price. Does that mean that you paid double what you should have in 2024?
We paid way more than we should have, and not because the contract was negotiated poorly. And I can't really get into too much of this because ultimately it's going to be talking about the drill contractor, right? And just things that we weren't happy about. Let's just leave it at that. Like, so there's a typical drill contract, there is charges for everything, right? So there's charges for footage drilled, there's charges for hours spent, there's charges for muds used, there's charges for bits used, there's charges for steel lost, there's charges for fuel used, there's charges for everything, right? And so, what contractors can do is if things aren't going well and, their drillers are, for whatever reason, they're not performing well or there's mistakes made, I mean, they can just essentially put whatever you want on the timesheet and you can try and sue them and say, BS, I don't believe this, or I don't believe that, right? But ultimately, you're probably not going to win, right? And so a lot of the cost overruns last year were just a function of that. We went in thinking, we have a pretty good standard drill contract, and ultimately, the end cost ended up being double what it was expected to be. So that's why we went with the all-in contract this year, so that it can't run over like that, right? We simply, it can't happen with an all-in contract, right?
Right.
There's
But
no room for that.
interesting situation overall. I'm glad you're kind of figuring it out right now. And really, why I'm asking how much money you want to spend on it. Two things: I want to know the size of the drill program, of course, and I'll have to be patient here and see that news release, I suppose. And the second thing is, of course, thinking capital raise. I mean, do you think you're going to have to raise money before you have some news out of the 2025 drill program?
No, 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 we're not going to raise money unless, I mean, look, if, let's say, hypothetically, maybe a major calls up and says, hey, we want to give you something at a massive premium right now before the drilling starts. Of course, I'm going to consider something like that, right? Like an amazing deal. But am I going to do a raise at a discount before the drilling starts? No, it's not going to happen. It is not going to happen. We
Is
have
it?
12 million bucks.
Yeah, yeah.
Most juniors would dream of having 12 million bucks, right? Like this is, we are very well financed. Like there's no issues with money right now. That's for sure. With the drilling contracts that we've negotiated, we're looking very healthy going into the coming up drill season.
Most juniors would dream of having a $12.5 million market cap to begin with, I think. So you're right. Is there really room for another strategic? I mean, you say if someone calls you up, a major calls you up, they want a piece of the pie. Barrick's already in there, and I've seen multiple stories with multiple majors in there, but this is Barrick that we're talking about, and they have a little bit of a different approach. What are they telling you? Is there like if someone else came in, would that step on their toes? And do you think there's room for another strategic?
I mean, there's always room. I mean, the reason I said it is this is a hypothetical situation. I want to be able to come on here and say, listen, it's not going to happen, right? Like I guarantee you, we're not going to do a raise at a discount. So if a very crazy situation arose where let's say another corporate came in and said, look, we really want to own 9.9 or whatever, and I could go to Barrick and say, listen, these guys really want to own 9.9. Here's what they're prepared to pay. Would you guys be okay with it? And they said, yeah, whatever. We are okay with that. Then something like that could happen. But Will it happen before the drilling? I don't know. I don't. And it could, maybe, maybe not. Maybe there's no chance. It's hard to say.
What is the, I understand you cannot tell me too much about the drill program itself. What is the overall, we can talk broadly, hopefully not too vaguely, but what is the goal of the 2025 drill program? I mean, are you out there trying to drill to kill, as everyone always says? That's something that I do like seeing in new belts specifically, or are you still trying to grow what you have, factor in on the high grade? What's kind of the overall theme, if you will, of the drilling?
Vectoring on the high grade,
Hmm.
for sure. So I'd say that there's sort of two strategies for the drilling, for the exploration. So we're either going to go, deep undercover and talking underground scenarios and try and find higher grade. So either that's going to come in the form of maybe there's a potassic center, right? We haven't found potassic alteration yet, and quite often potassic centers are significantly higher grade than the phyllic. So I mean that's one thing we're trying to target, and we have some ideas where that could be for vectoring to that. The hypogene enrichment, that we could find a feeder zone to this hypogene enrichment blanket that's up. We haven't found where all this, the enrichment is kind of a blanket shaped geometry, right? So typically a vertical feeder structure will come up and feed that. So that could be another way we find, really high grades. It could work in a block cave scenario. The stuff we talked about in the news release today, host rock, right? We've kind of realized we had this light bulb moment, right? With all this mapping data that's come in, we've been drilling felsic rock. We've been drilling like the worst host rock, you would really want in a porphyry system. There's no iron. There's no like limestones or really anything that can react with the porphyry fluids to cause high grades. So, to the southeast in areas called the Southern Flats, the Eastern Block, we see potential for significantly higher grades. The host rocks are so much better. They're so much better down there. And we know that the system extends that way because we've got the geochem, right? We've got the surface geochem from the Eastern Block Zone where it daylights. And we've also got the geophysics, right? So the 2023 survey we did extended down that way. And the anomaly, as you can see, extends right down through into this Southern Flat Zone. So we know the system extends down there. So we've got all these targets for higher grade, which, could still potentially very much work in an underground scenario, but we've also got the Eastern Block, right? So the Eastern Block is this big area where it actually daylights its surface. So there's no overlying Jurassic or tertiary cover. And so one of the last holes we drilled was this hole 20. And I think it's the first, probably economic hole that we've actually drilled because it's so close to surface, right? So if we can continue to find more of that hole 20 grade as we move east into this Eastern Block Zone, there could be more of an open pit target. So there's a lot of ways it can go, but yeah, this is exploration, right? And we're certainly not like, okay, let's start building the resource now. Like we're still in the exploration phase for sure.
I do want to talk about these low iron felsic volcanics that you've been drilling. Just to clarify, 2025 drilling, you're still kind of after the mineralizing engine, essentially. That's what you want to go out there and find.
Totally. Totally. I mean, we want to find the center. We definitely haven't found the center yet, right? So porphyries are simple. There's, a potassic center, which has got magnetite, potassium feldspar, and biotite. It's simple. It's pink and black. We found one before up in the Golden Triangle, like we talked about earlier. We haven't seen anything close to that yet at Hercules. We've seen what's called the phyllic, which basically is this huge, huge thing that typically comes down on top of the potassic, will actually overprint the top of the potassic. We've seen lots of that, and basically everything we've drilled so far, last year in 2023, it's all been phyllic altered. So let's find the core of the system, like number one, and let's see what kind of grades we're going to get in the potassic core. But of course, all these other things I mentioned, like, there's hypogene enrichment here. I mean, that in itself is an extremely, rare phenomenon that's only happened because there's a second overprinting porphyry system, maybe at depth. We don't know. So a really, 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 really interesting thing here that was a huge, huge surprise to all of us. And so I know I'm going on a bit of a technical tangent here, but one of the first things Barrick did when they showed up is age dating. Because I had just assumed, okay, you got an epithermal silver system, and there's a porphyry over here, right? It's all just one big zone system, right? We all made this assumption, but it turns out it's not. So the porphyry, we've dated, dozens of samples. It's 207 million years old. The epithermal, the silver mineralization, you can't date the mineralization itself like you can with molybdenum and a porphyry, but you can date the host rock, right? So we can date the Hercules rhyolite that it sits in, right? And that is dating at 187. So it's 20, so the rock that hosts the silver wasn't even there until 20 million years after the porphyry system had formed. So you got these two overlapping, mineral deposits essentially, and the silver is epithermal. So it's still something that occurs in the upper levels of a porphyry system. So the question is now, like, where is the porphyry system that's 187 MA that fed the epithermal? It could be 3 kilometers down, right? It could be beyond our reach. And we're going to be doing MT surveying and stuff like that to hopefully, try and see down that deep. But it's very likely what caused, we're about 90% certain now that's what caused this hypogene enrichment. So they're the sort of enriched stuff at the top of the porphyry system. So that, is obviously something we're going to continue to expand as well. And that could also find, incredible grades somewhere else. So there's just lots of ways to go.
Why is this epithermal overprint here, the hypogene enrichment that you're talking about at the top? Why is it not more mineralized? I mean, is it the fault of the host rock? Could it be the mineralizing event not being strong enough, or like, why isn't higher grade? Is essentially what I'm asking.
Well, it is high grade, right? It's like 0.7 to 2.8, which actually is quite high grade. So if you look at like Tom Woolrich's, some of the stuff he's posted on Twitter, right? So he's actually modeled this, which is quite impressive. And I think, he's mentioned things like, it's over 100 million tons of this, he calls it the pancake, right? Over zero point 0.7. So, 0.7 copper, like just copper, not even equivalent, is pretty high grade in porphyry. Now, can it get better? And thicker, right? Like, can we find hundreds of meters of that somewhere that's closer to like 1.5%, 2%? Yeah, I mean, absolutely. We don't even know where it's coming from, right? We still haven't even found the feeder zone, the vertical feeder zone for it. I have a feeling, like, my hunch is Southern Flats, kind of everything is sort of telling me Southern Flats. But yeah, I mean, we're also, I should mention, we're going to be taking more of a grid-based approach, speaking of the drill plan. So rather than this sort of like, specific targeting of anomaly A, anomaly B, we're just going 500-meter spacing. Not exactly like 500-meter grid, but we're going to start off like, let's just create a 500-meter grid. And when you're looking for a concealed deposit, there's so little information that you have on surface. And you can try and use the geophysics to get cute and sort of point at little things in that. But at the end of the day, Barrick's biggest advice, right? And this is what majors do, is just go out and just drill 500-meter grids. Because in big systems, you need to expect the unexpected, right? You need to go and kind of get that context, that big picture context, and then you can start to bring it in. So yeah, it's going to be a different strategy, a totally different strategy that we're looking to do this year.
And part of it is, I suppose, this finding that you just talked about. I mean, the low iron felsic volcanics that you've drilled so far, and that you talk about that they're suboptimal for copper mineralization. And you say that hopefully future drilling is going to be in those iron-rich host rocks. And you think that they will yield better grades. Essentially, that's kind of my 75 IQ summary of it. Is that why do you think it's the iron-rich rocks that will yield better grades? Because, and this is, we're talking about the host rock in the context of what I asked you previously, and we'll get to the mineralizing event here in a second as well. But why do you think it's the iron-rich rocks that are going to give you the better results?
Yeah, so it's kind of a common, sort of a known thing in porphyry systems, right? The host rock is everything, and even in our the area we've been drilling, we group that sort of upper group that, we've been drilling all felsic volcanic, all low iron, but it's not completely 100% low iron. There are layers of what we call andesite in there. So andesite is more iron rich. And so we can see as these holes are going down, they will, as they enter into these iron rich layers, because they're not zero, the grade will go way up. And so it's very clear. And I mentioned earlier, right, you're going to say, well, how do you know that it's an andesite as a felsic? These rocks are altered. These rocks are completely blasted with sericite. All you can see is white rock. So that chemistry, right? I mentioned Scott Halley earlier. We send him all the data. So that was one of the things, scandium over aluminum, that he taught us. And so the reason we use scandium is because scandium, it doesn't move around. So you can throw as many porphyry fluids as you want. The scandium's, it doesn't get altered. It doesn't, exchange in and out of the rock like other elements will when they undergo alteration, like potassium and sodium and all these sorts of things. And so scandium is a direct proxy for how much silicate iron was in the rock before it was altered. And so we can sort of look at all these plots, right, of everything we've drilled so far, and where this, the high scandium rocks, in these downhole sections, the copper grade spikes in them. And then you'll go back into the low scandium rocks. So in other words, the more felsic rocks, and the copper grade will go back down. So it's very evident that, just like every other porphyry system in the world, iron is super, super important. And I mentioned why in the news release is because, porphyries, when they come in, they kick off all these fluids, right? And they kind of go off everywhere into the host rock. So they've got copper and they've got sulfur, but to form chalcopyrite or bornite, these are copper iron sulfides. So you need iron from the host rock. So if your host rock doesn't have iron, and there's examples of this at porphyries around the world where you get into like quartzites, which have zero iron, and you'll go from spectacular grade to absolutely zero simply because of the host rock changing to having zero iron. Resolution is a really, 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 really good example of this, right? So the resolution deposit, which is, BHP and Rio Tinto in Arizona, really, really, really deep discovery. I think it's like 1.5 or 2 kilometers down. Why is that thing? It's something like, I don't know, it's over 1 billion tons or something like that of like 1.5, 2% copper. It's insane. Like it's remarkable grade. And the whole reason for that, if you Google this or look at any papers out there, it's all because of host rock. So they had the perfect storm there. Basically, the fluids came in and they basically all went into an iron-rich rock called a dolerite, which is an iron-rich sill, and limestone. So they just had that. They just had iron-rich rock and limestone, and that's what caused the spectacular grades at resolution. So it makes a huge difference. It really is everything, like when I say that.
It is. No, I suppose it is. It's true that it's a big part, but if the host rock chemistry works the way you expect it, you'll still need the mineralizing fluids to have been kind of strong enough and for them to have flown properly in the right temperature and all that to mineralize that host rock. As far as I'm not a geologist, by the way, so if I'm saying very funny
Of
things,
course.
laugh at me. But what is your internal thesis telling you about the strength of the mineralizing event here?
Well, the strength of the mineralizing event we know is huge, right? So it's kind of, early on, in last year's season, where are the really good grades? Like we're seeing alteration and veining like you wouldn't believe over kilometers and kilometers and kilometers. So what that tells us is the amount of fluid, the volume of hydrothermal fluid that has moved through these rocks is like insane, right? Like very, 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 very large system. So we know that the system's huge. We know that there's very likely to be multiple centers to give off this amount of fluid to cause this much veining and this much alteration over such an immense cubic meters, let's say, of rock. So we know the system's there. We know the fluids are there. Let's now move down to the southeast where, yeah, we haven't drilled there yet. So, we can't say for sure that we've seen alteration. We know the system's definitely down there. But based on the size we've seen so far, and the fact that the geophysics, right, so both the IP chargeability as well as the resistivity right, shows a system extending down to the south, under Southern Flats, and Eastern Bloc. I mean, it's extremely likely that that's telling us that the system does extend down that way, because this is lighting up with basically sulfide, right? Chargeability is telling you where there's disseminated sulfide, and conductivity is telling you where there's alteration. So I think the odds are very, very strong that the system, the fluids are just as strong down there as they are up in the north.
Mm. That's where you expect to see more biotite alteration than biotite. That's difficult for me. I don't know why, but it is. But that's when you expect to see more alteration.
Yeah, well, we don't know for sure what type of alteration. That is going to be a big question mark, right? So what we've seen so far is the phyllic, right? We've seen that kind of more marginal stuff. That's it, the stuff that comes down and overprints the top of the potassic. So we've seen a lot of that. A couple holes have started to see the biotite, like you mentioned. Now, biotite, what is that? That is basically the edge of the potassic. So the potassic, when you're really in the potassic, it's going to be a salmon pink mineral called potassium feldspar, K-spar, and magnetite. And it's going to have biotite as well. Now, the biotite is going to be like a huge kind of area, right? Like it's like the entire potassic zone, let's call it outer potassic zone, will have the biotite. But what we're really looking for is that inner potassic zone, like the true core. And that's when the K feldspar and the magnetite will start to show up. So we've sort of seen a transition in a couple holes from pure phyllic into, oh, the phyllic's starting to go down and now biotite's starting to pick up. So we're starting to see a transition in alteration. But yeah, in terms of like how that transition continues as we continue to step in those directions, we'll just have to see.
What happens if you can't manage to vector in on the high grade core in 2025? Though I know it's not the warm and fuzzy feeling to think or talk about it, but it's basically, well, correct me if I'm wrong, but in talking off the top of my head, but it's basically two options, right? Raise again and keep looking for it, or start building a low grade bulk tonnage deposit model instead. Or is there a third option that I might be missing?
Yeah, I mean, like, I think the question is like, something you could ask any exploration story, right? What happens if you don't hit? Well, if you don't hit, you don't hit. That's just that's exploration, right? This is a high risk, high reward business. And I think that's really the best answer I can give you. But that being said, like Tom Woolrich's model, there's maybe, I mean, I can't really say numbers, right? I'm not allowed to, but maybe over 100 million tons of, call it zero point 0.7 or something, right? Or over zero point 0.7. And maybe that's something that, like, worst case scenario, is that Barrick size? No, no, Barrick's not looking for 100 million tons, right? Barrick's looking for 1 billion tons, right? But maybe that's something that would make sense for a smaller mining company. Worst case scenario, right? Worst case scenario, we don't find anything else, right? Like all these targets end up just being total duds, which I think the odds of that is extremely low. But to answer your question, there's always going to be that enrichment blanket, there that's modeled.
So why not go and model it in 2025 consequently together with the exploration drilling? I mean, you can still have an MRE out and still do exploration, kind of put a backstop behind evaluation, if you will. Why not do that?
Well, yeah, you know what? It's an interesting question. I haven't considered doing an MRE for like the market. We are actually doing one internally. We've got a modeler that we actually just had a Zoom call with him yesterday, and he's going to start doing it. It's actually for internal purposes. So we are having him model the copper and the molybdenum, as well as a number of other things as well for us, right? Like, so this kind of gets into the geological modeling too, because he's a pro. Um, and we're going to use that as an exploration tool, right? Now, whether we want to announce that to the market, like do a proper MRE, like 43101 level, that's not what he's doing. That's not what we're paying him to do. And you know what? Quite honestly, like my mind, 100% is on finding the guts of the system, which is out there somewhere. And I want to at least have a shot at finding that, before we start, saying, okay, well, let's start modeling the enrichment blanket as it is now. I don't think it's the time for that.
Hmm. Having mentioned Barrick makes me think about the relationship you have with them and how that's going and what they're telling you about where they want you to drill in 2025. I mean, if well, Barrick is in there for you to find a Barrick size deposit, essentially. Where do they think it is, and what are they telling you?
Well, I mean, no one knows where it is. I think they're very bullish on the Eastern Bloc zone for sure. Like they really like the fact that there's no cover there, right? I think everyone really likes the fact that you've got a potential open pit target there. So a lot of these grades we've released, people will say, "Hey, is this really going to work as an underground thing?" But if all that stuff was like starting at surface, it might be a very different discussion, right? So they're like, "Look, take the grades, even if the grades don't improve." Right? You start getting that stuff starting near surface, like it's a totally different situation. So that's their favorite target by far, and that's very much where they push to go.
Hmm. Do you guys talk often? How much influence do they have on where you drill? I mean, I assume the buck stops with you, but how much influence do they really have?
The buck always stops with me at the end of the day, but I mean, why would you think about like why wouldn't you take uh, free information and free advice from, I think majors are the best exploration companies in the world, which I think a lot of people think the opposite. They think juniors are better explorers, which is just not true, right? It's not the case. You'd be amazed at the talent Barrick has behind it. I mean, they've got an expert at everything, right? And you can have access to a geophysicist, like an expert geophysicist, expert structural geologist, expert geochemist, right? Like very, 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 very talented people who know what they're doing, who are smarter than me. So yeah, we're very much about taking their advice. And a lot of the strategy, like I talked about the 500-meter grid, they were pushing that actually from day one. I kind of wish I listened to them sooner. And it's an interesting thing, right? Because people talk about step out size. A lot of juniors are afraid to step out, like big proper step outs. Like, and there's always this argument, you make a discovery and you're so scared to lose it, right? The market's so tough out there, so unforgiving. So CEOs tend to want to stay really close to that discovery. They want to continue to put out news releases with nice intercepts, but that's not the most cost efficient way. Like if you want to find a mine, a billion-ton mine, like that's big. That's really, 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 really big. And you're not going to do that with 100-meter step outs. It's going to take you, it's just not going to happen. You have to do big, scary step outs. The problem with big, scary step outs is you're going to miss on a lot of holes. And then that's what happens with us. Like we do take big step outs, right? We're taking 500-meter step outs in places, but we're going to miss. But this year, it's like, you know what? I'm seeing enough, like now that we've got all the 2024 data in, we've got all the assays in, we've got all this, right, like this model coming together. I'm just a lot more sort of confident now, especially with this, this host rock change in the southeast with the geophysics and everything. We also know that the system's tilted to the northwest too. So that's a really interesting sort of new insight that's really, really, really firmed up as well. So we know that everything's sort of plunging to the southeast too. So I'm a lot more confident now doing big step outs. And let's face it, other than the Eastern Bloc zone, we're dealing with a concealed target here, right? So you just as cute as you want to get sometimes with your little, targeting and small step outs, I think it might actually serve us a lot better to just, do these big step outs and just swing for the fences.
That's essentially why I asked you, are you going to be drilling drill to kill this? Because it is easy to stay close to high grade and keep producing results. It is easy to keep receiving a paycheck and doing work that is maybe lower risk and I'm not going to call it easy because I have no idea how easy or hard it is to be a CEO, but it is lower risk. So that's why I asked
Die
you.
slower.
Yeah, exactly.
in some cases, right?
That's why I ask you about the drill to kill thing, and that's what I want to see as an investor. I want you to either advance it or move on. Um,
Yeah, exactly. Now, if there isn't a mine here, right? Like if there isn't, a big sort of Barrick size mine here, like let's figure that out now, right? Like let's do it, right? Like a lot of juniors, will slow step out their way to death, and then they can't raise any more money, right? We've got 12 million bucks. As much as people say they are worried about 12 million bucks, you shouldn't be worried about 12 million bucks. That's a lot of money with the contracts we've negotiated going into this year. Um, yeah, we can do a lot of damage with that with big step outs here.
you mentioned that the system is plunging southeast. Have you seen any post mineral faults that could have offset the high grade core, maybe? Because that's essentially what you're chasing here. Like, could you be drilling in the wrong direction? Or could you have been drilling in the wrong direction because of, I don't know, an undiscovered fault zone or something like that?
Totally. And really like because of all our drilling has kind of been in one block, let's call it. Um, no, we don't really have a great handle on any huge post-mineral faults or like where they might be. So that's kind of another reason to get back into the big step outs, right? Like you don't know. I mean, yeah, absolutely anything could change and things can move up, things could be moved way down. You just don't know. But
Hmm.
I think getting like if we were to let's say start with a whole grid of 500-meter step outs, drill, massive step outs into the southern flats, massive ones into the eastern block, massive ones up into Grade Creek, the quicker you're going to get a handle on, oh, like this is like really shallow alteration that we're in now, or yeah, and over here, this is like really, really deep alteration over here. So something's moved down here, maybe something's moved up here, but that's the context we're trying to achieve. But by starting off with the big step outs, right? Get that big picture, and it's going to help us, I think, in the next phase.
Hmm. But is there really a clear increase in grade as you move southeast?
I wouldn't say there's like no, there's not like a clear pattern, not in the stuff we have now, right? It's conceptual. At the end of the day, it's conceptual. We have hole 20, which hit really, what I think again is probably, the most economic hole we've hit so far, and that's literally, basically almost in the Eastern Block zone. So, there's that there. But I think the variability in every single one of these holes we've drilled, the fact that most of them are these felsic volcanic host rocks, and then you'll get spikes up into the sort of more scandium-rich rocks,
Mhm.
tells us that, we just need to get down into those scandium-rich rocks and just find out. Because otherwise, we sort of get into a loop where we're just speculating too much, right? Could be this or this could be happening or that could be happening. In geology, that's kind of the problem. There's a million sort of, oh, could be this or, could be doing that, right? It's just, you just got to drill it.
Yeah. It's the fault of the host rock. We'll blame it on the host rock, and hopefully next year will be different. How deep does or what depth does the model here break, if you will, and therefore how deep do you think you're going to have to drill it?
The model, like the geological model or like the
Yeah,
geophysics, or what do you mean by that?
geological.
Well, I mean, we have data as down as deep as we drilled. I think the deepest hole, like vertically, was hole 2321. So that was last year. We went basically a kilometer straight down. Now that was an interesting hole. That one went from enrichment zone in a felsic rock, we call that the FQP, feldspar quartz porphyry, into late porphyry, dominantly late porphyry. That was a real thick, that was like the thickest section of like late porphyry. And then we ended in volcanics, well, wall rocks again. So the grade went back up again. So yeah, I mean, in that specific hole, we've got data going down a kilometer, but in other areas, we don't have it going down that deep. So, a lot of like geological models, they're interpretations. So, end of the day, like even with surface mapping, obviously there's only so much outcrop exposure. So, all you can really do is sort of go observe, make as many observations as you can, at every outcrop you can access, but the rest is all interpretation, right? You're basically saying, sort of correlating between what you're seeing. The same thing with the drilling. And so, yeah, in areas we can sort of, okay, we know the late porphyry ends, roughly here in this hole. So we're going to sort of infer that out. We're going to correlate that out and say that, this is what we think it's looking like. And I think we've got a pretty good handle, right? After, the number of holes we've drilled in the last 2 years, we've got a pretty good handle on the southeast plunge of this porphyry.
Mm. There's so much more to talk about, but essentially it comes down to you have to drill it to see. And so 2025 is going to be telling. That's kind of what I'm getting from you. Very telling as to what is the potential for, underground at depth porphyry grades and whatnot. So 2025 is going to be interesting to see what you come up with there. Please interrupt me if you have to go. I know we've been talking for a while, so if you have somewhere to be, please interrupt me and you can go. I want to talk about metallurgy here for a second, though, if you still have the time. You had some news on that late last year, I believe, with a um, projected copper concentrate or concentration in the concentrate. The grade was 24%. Do you think they'll have to that you would have to? I know it's early stage, but you have to blend it with higher grade for I don't know, somewhere in order to go into that 25 to 28% range that is typically preferred by smelters.
Totally. So yeah, that was the phase 1 testing. So, kind of, the most preliminary kind of stuff that you can do. And right now what we're doing is Deepak's carrying out the phase 2 work, which is copper moly separation analysis and this locked cycle testing. I, I know he's going to try and improve the concentrate grade. He's going to try and improve the recovery too at the same time. I'm not enough of an expert on metallurgy to really say much more than that, but those are sort of the two things he's working on in the next phase. Yeah.
You mentioning Molly grades and recoveries weren't all that high in the first pass in that news release. Do you think molybdenum will actually be a credit here, or could it turn into an issue? I mean, a penalty.
Yeah, I mean, it's tough to say. The moly grades obviously haven't been, a huge component of the grade. Like it's been pretty dominantly copper, like is the value. But hole 20 was, again, it was a weird one. Like it had the highest moly we've ever seen, right? It was getting up towards the 200 ppm range, getting closer to that 200 ppm range. I think you probably want to, see 400 ppm would be like really good credit in a porphyry. But yeah, again, just sort of comes down to yeah, what we might start to see in some of these other zones for sure. Because yeah, we really are just still in that exploration phase.
Yeah. What about the silver? Would you expect that to be recoverable as a credit?
I think so. Yeah, I definitely think so. Now, typically, like in the porphyries, silver and gold will be sort of minute microscopic little inclusions in the copper minerals. So if you're creating a copper con, which is going to be chalcopyrite or bornite, your gold and silver is all going to report to that copper con. And so, the smelter is going to pay you for it no matter what, right? You don't really need to do any extra steps to recover like a silver con. That doesn't work like that. But the Jurassic silver is kind of interesting. So Deepak, what he was saying is, we ran some met tests on the Jurassic, like the epithermal silver as well. And he was actually able to do this two-step leaching process. So what was sort of hindering it? Historically, they were getting like 60% on the silver, which still isn't actually that bad. I mean, silver is kind of always, challenging. It's typically challenging. But they were getting 60%, and the reason being there was manganese, right? So you get silver, lead, zinc, and manganese can actually consume a lot of the cyanide, right? So if you want to just do a low cost heap leach, manganese is kind of your enemy. And so what Deepak did is he did this pre-leach, where you actually it was a sulfuric acid, sulfate or sulfuric acid pre-leach, and that actually strips out the manganese. And then once the manganese is gone, you're getting, I think it was like 84, 86% recovery on the silver and both oxide and sulfide, which is pretty good. It's really good for silver.
I've been out of my depth for about an hour now. I think right after we said hi, how's it going? What is the what's your targeted G&A going to be for 2025? I'm kind of rushing through it because I know you probably have to go soon, but what's your targeted G&A for 2025?
Yeah, I'll be honest, I don't really have like a target G&A. I mean, I'm definitely in this sort of mode, warpath of cutting all kinds of costs. So our CFO, Keith, has actually just put together a budget for that exactly. And we're going to sit down, and the next step is we're going to go through and see what can we slash, right? What can we cut? And really the mode is we got to make this $12 million last as long as we need it to last, right? Like most junior companies, $12 million should be able to last you a very, very long time. And I want to make sure that Hercules is, that's the case. Obviously, the biggest thing is the exploration, right? Like I think, what was the ratio you said at the beginning? Like how much is spent or what percent is spent on exploration? Like it's a high number, right? So
87% if you
that's
just
the
take,
first thing.
yeah. I was at 87, 86%.
Yeah, so it's kind of like the same thing with good analogy would be copper moly, right? Like Deepak said, look, 87% of your value is with the copper. The moly's is small credits. We're going to focus on that first. We're going to focus on getting the recovery of the copper really high, and then next phase we'll look to improve on the moly. It's kind of the same thing with the exploration versus G&A, right? Start with the exploration. That's what we're spending 87% of our money on, and then let's try and tighten up the G&A a little bit, but it's obviously, what, 13%, right? So it's much, smaller, right? So even if we saved, let's say we cut, a quarter of that, we're only saving them 4%, right? For quarter of 12%. So yeah, it's not my number one focus, but we want to save money everywhere we can, obviously.
That number, so the 87% and that ratio did not include share-based compensation. Share-based compensation for you, 9 months or the 9 months that ended on September 30 was $1.4 million. That's on the higher end, I would guess. How is that determined, and is what's kind of your option strategy or your share-based compensation? What is it based on?
Geos. So we hired a lot of geos last year, and we obviously want to attract quality geos because that's a whole other conversation we could probably talk about for an hour. Is this huge crisis this industry is in right now with talent and geoscience talent? It doesn't exist, and so it's a very competitive market, unfortunately. And if you want to attract better geos, yeah, you gotta give them good options, right? Or RSUs, whatever they prefer. But that also aligns them more heavily with success in the company. That makes them more likely to put in weekends and after hours and actually want to make a discovery instead of just getting a paycheck every week and
Hmm.
going snowboarding or whatever.
Snowboarding is nice though. I don't know if it's nicer than geology. What about the bonus structure? I haven't seen your management information circular from 2024. I don't assume it's ready yet. It's probably going to be ready in the summer of this year. Total compensation for you in 2023 was made up of a salary and a bonus. They were kind of the equal size. Total amount was $360,000 in 2023. Again, that's two years ago. So two-sided question here. How much was that in 2024, and where do you expect that to be in 2025 is one part of the question, as well as the second part is what's the composition of base salary to bonus, as in what I'm asking here is how do you determine how much money you're going to make this year?
Yeah, I don't determine it at all. In fact, that was something I pushed back on, believe it or not. And it was the board that decided that I was due for a raise, right? And that was post the Barrick financing. So I know that number you quoted actually went up. So that wouldn't have been 2023. So I don't know if it says 2023, that's not accurate. I don't know why. But that went up. That probably would have been the very beginning of 2024 that was that bonus was granted to me, or it might have been the end. Maybe it was the very end of 2023, and but either way, it was post the discovery. It was decided by the board. You know, it was a decision that they made, and they felt that this is whatever 400 million market cap at the time, we're giving this guy a bonus for what he's done for getting us here, right? Like, you didn't even want this job in the first place, so here you go,
Well,
kid.
that's what I'm asking you is it tied to share price performance? Because if it is, you took it from 20 cents to $1.60, you can have a bonus, and I mean it wouldn't
It was a
be
one-time bonus. Yeah,
yeah.
it was a
But
one-time
the size of
bonus.
it wouldn't matter, almost would not matter to me at all. And if you do it again, you take it from 20 to 160, that's 8. So if you take it from anyways, if you take it another 8x now and you get a bonus, nobody's going to be mad. The whole point is, what is it based on? I mean, is it going to be a bonus in perpetuity, irrespective of the share price performance, or what is it really based on?
Yeah, that's a great question. So the board hired a group called Global Governance Advisors. And so these guys come in and they determine what fair compensation is for everyone. It was actually great because we could use them when we were hiring all these geos as well. So it was kind of good timing. And they came up with it. I could honestly, I really couldn't even tell you exactly what metrics there were. It was like, hey, let's give this guy a one-time bonus for kind of everything he's done getting us to where we're at today. But it was a one-time bonus.
Okay.
So I don't know if there will be another one. They would have to decide again if we 8x or something again. Hey, maybe let's give him another one. But yeah, no, for now it was just a one-time thing.
I don't think anyone would be mad or should be mad if you get a bonus after an 8x. It's really on the other side that I guess I was thinking about marketing plans. Again, I'm kind of running through everything here. Where at the beginning you told me you want to get stronger institutional backing. Where do you go looking for them? I mean, PDAC's coming up. Are you going to PDAC? A bunch of other conferences in the back of that. What are you doing? Online marketing. Tell me everything.
Yeah, so I mean, institutions are, they're meetings really at the end of the day, right? Institutional marketing is really just taking meetings. And so there's going to be a lot of virtual. The virtual is always the easiest way to do it. We're going to travel to like Canaccord puts on a conference every year that we find really good. Beaver Creek, for us last year was all institutional and corporate, right? And the majors. So yeah, there's select conferences. I'm not going to PDAC this year. My wife and I just had our first baby, so I gotta stay close to home and, obvious reasons, sorry. But, we're working on some pretty big stuff right now. I can't talk about it, unfortunately, but we're working on some really, really big stuff right now. And my time is way better spent, not only here with helping the wife with the baby and being around the baby, but, some of the stuff that we're putting together here, at the desktop is just, you're just going to have to take my word. People are just going to have to take my word that, I think it's going to add more value to the company in the long run than a booth at PDAC. As nice as it would have been, uh, Toronto in March. Oh well, not going to miss it. Sorry.
Congratulations on the kid. You look like you actually do get some sleep, so maybe you're using a filter or something. I don't know. But you,
So, yeah, it's a special bassinet, life changing. Any parents out there, who are having their first kid, get the SNU bassinet. It's incredibly expensive. You can find it. We found one on Facebook Marketplace for half price, but it will change your life and it will give you sleep. And thank God, because I don't know, I don't think I'd be able to survive this job if I didn't have that thing. So there's a plug for SNU.
I don't know how you're able to survive the job to begin with, and I make YouTube videos for a living out of a dark dungeon, and I know I'm barely hanging on, so I don't even know how you do it. But I do appreciate your time. I'm gonna let you go now, Chris. What am I forgetting to ask you here at the end? What did you come here hoping to talk about that I failed to bring up?
Yeah, I mean, look, we covered it pretty good, right? I came here wanting to obviously talk about, what I'm seeing coming up here for 2025. Like why am I excited about, the upcoming drill season? Why is it going to be different than 2024? And I think we really hit on those two things. One is the cost savings, right? It's 56% actually is the actual, number, for all in what basically our all-in drilling cost is going to be and is a definite line item in the budget because it's all in relative to what we paid per meter last year. So we're going to get more than double the meters for the same amount of money. And obviously, with these sort of new insights, that we talked about, if we're just going to sort of summarize what these are, today's news release, host rock is everything, right? Way better in the southeast. We know from the geophysics, we know from the plunge of the system, it's going to extend down that way, right? So barring any major post-mineral faults, the odds of success are significantly higher, I think, in the southeast. The other thing being the potassic center, right? We still haven't found that case bar magnetite potassic center, which we found up in the Golden Triangle in 2017. We know what that stuff looks like, right? And believe me, that little bit of biotite we've seen is just the beginning. So it's going to get better, when we vector into that. And the hypogene enrichment, right? We've got this very special thing going on that, a handful of porphyries in the world have as a function of this 20 million year younger epithermal system, which is probably fed by a porphyry. Who knows how far down? We're going to be, oh yeah, okay, well, there you go. Here's one thing we forgot to cover, the geophysics. So we're planning an MT survey, which is magnetotellurics. It's basically like ZTAM or mobile MT, which a lot of companies use as an airborne method for seeing deep, right? So measuring resistivity and conductivity deep. So we got this expanded land package now. That's another thing we didn't mention. We've staked all these new claims, going way, way up to the northeast, a long trend, and they're all covered, right? So it's all concealed. So there's only one thing, well, two things we can do, geophysics and drilling. And so we need to expand on the 2023 IP survey. It's really not feasible to continue running wire any further than we've already run it because of all the wildlife and, they break your wires. It's very not cost efficient. It also doesn't see, so the last IP we did can see down about 800 meters confidently, and that's about your lower limit. And so what we're doing is MT. MT, if you do it right, I mean, a lot of times, so minimum is 2 kilometers you're going to see down. We're partnering with probably 2 of our neighboring companies, and assuming that they do go through with this partnership, it's going to increase what's called the aperture. So aperture is like the size of the survey area, and the larger the size of the survey area, the deeper they can actually invert the data down to. And so we're going to be doing certain normally you leave these things for 24 hours. Some of these things we're going to be leaving for 48 hours. And that allows you to record really low frequency data, like really, 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 really low frequency data, which can see super, super deep. So ultimately, we're actually targeting 10 kilometers is how deep we're trying to see down with this MT survey. And it's going to cover, obviously, all the new land that we staked as well. And so the idea is it's probably going to generate, more new targets as well. So even if everything went to hell in a handbasket this year, we're still going to continue generating more new targets. But the reason we're doing this, why are you going down 10 kilometers? You can only, you would be very impressed to drill down 2 kilometers, right? That is a extremely deep hole. That's the absolute max limit of drilling. So why would you want to see down? Well, it's going to help us, right? It's going to help us with the geological interpretation. Porphyries will go down way deeper than you can drill. So, we've inferred that these systems are plunging southeast, which we have a very high degree of confidence on, but it'd be a lot better is if we could get the whole big picture. Right now, our current survey, the anomalies are still kind of open on the edges of these things, right? So we're still not seeing the whole thing, right? We need to just really zoom out and really see the whole thing. What's the whole system, the whole footprint, and 3D? Is it going steep to the southeast? Is it going shallow to the southeast? Get a really, really good sort of image of that. See what the major controlling structures are that these things are coming in on, because we've got obviously more than one mineral deposit here, 20 million years apart, and they've kind of come up this same structure. So what is that structure? What is that all about? And, there's this kind of sort of thing that's always in the back of our minds is what is sourcing the epithermal, right? We always thought that the epithermal silver was the porphyry we found, but it's not. It's younger, and there's probably another porphyry deeper down there, and maybe it is within drilling reach. I mean, some of these holes, like around the hole 12 area, the bottom of all those holes, the grade starts going up again. So, what? Maybe there's something else down there. But either way, we're pretty confident that's what fed this hypogene enrichment, that upgrade blanket at the top, right? So there's this sort of deeper, porphyry, and we're just up at the very top. We're kind of in the epithermal environment above that 20 million year younger porphyry, and fluids are sort of coming up some major structure. We think, probably the feeder structure for the hypogene enrichment. Again, another sort of high grade target that we're going after, and feeding that blanket. Something's feeding the pancake. So yeah, the MT is going to be, I think, super exciting. We're going to try and start it in the spring. Hopefully, sort of get it done before the drilling. We're going to do it in 2 phases. So the plan is go out, do like really broad 1 kilometer space stations, and then they're going to go do the neighbors and run the inversion essentially on our property. And then once we sort of know where the anomalies are, we're going to go back and do a second phase and get high resolution data. So yeah, that's going to be a really sort of cool new targeting technique that we're going to have data on, sometime, who knows, early summer, I would imagine.
It will be interesting to see what's driving the hypergene enrichment here, or the epithermal stuff, and whether it is really a porphyry or it's structurally controlled or what else. So that'll definitely be kind of a highlight. Are you planning on getting more land, though? I mean, there's not much left, I know, in the region. I recently interviewed one of your smaller neighbors, but I know some of the bigger companies have also just kind of jumped into the region as well. But are you planning on getting any more land, either through acquisition? Again, you do have smaller neighbors, or I mean, trying to stake something new?
Yeah, we still haven't actually press released everything we got.
Mm.
It was yeah, there was kind of like this like silent period for a while post discovery. The crappy thing about being a public company is you got to tell everyone, you got to tell the world about your discovery, right? Gift and a curse. So, majors, they wouldn't have to do that. They can go, quietly consolidate the entire district to themselves. So we have a staking war. Barrick, they ended up with like 6,000 claims, I think, in the district. Like, so before the discovery, Barrick didn't own a single claim in Idaho. I believe now, if you go on like My Land Matters and stuff, they're now the largest claim holder in the state of Idaho post this discovery, right? So they obviously believe in the district. They believe they didn't just make the investment because they want one porphyry, like Bristow wants 13. So, yeah, what was the question? I'm getting so sidetracked here. It was
Whether
something
you're going to
about
be
the,
buying, and I'm already coming up on another question actually on
right.
Bristol, but whether you're going to be not buying, well, maybe buying, but so getting more land, or looking to stake or buy more land.
Yeah, so we obviously got a head start on everyone, right? And we were obviously out there staking. When we saw the core, we're waiting for assays to come out, right? We had some time, and we've got a really good land position together. Now there was still competition, right? We'll talk about that when the time is right. But hopefully, in the next month. I mean, I hate putting times out there because I always get super burned every time I, say a date. But hopefully, in the near future, we can finally start to talk about, what did we get? Because the dust is essentially settled now. There's the last few little specks of dust still settling, but we're pretty happy with what we got. So I couldn't see us acquiring more land, but you never know, right? Like there is definitely, you know, I think the district could benefit from, consolidation and potentially having it all under one roof. That's something I've heard from up top, right? Like it could benefit from us acquiring more land.
You just mentioned Bristow. Is it how high up Barrick does this big go? I mean, does it go up to Bristow? Is he thinking about Hercules? Are you talking to him personally? And then, yeah, how high does it go?
Yeah, way more than I ever would have imagined, right? Like,
Hmm.
like Mark Bristow to me was just like this kind of, just super figure god of the mining industry. And we could do a whole podcast on how the deal came together. That's a crazy story in itself. But yeah, he is passionate. He is super passionate about this district. So I met him for the first time actually at they do like a PDAC party every year. So they had one last year, and I got to, actually like starstruck sort of meeting, with Bristow. And, I thought he was just going to be like, oh, hey, this is Chris. He's Hercules. And he's, oh, man, cool. And he knew everything. He was like, yeah, that's why I got that 13 porphyries from that came out of his mouth, right? He said, look, we got Rico Deek because there's 13 porphyries there. Well, we came in here as aggressive as we did, right? They paid a premium for Hercules like that. They don't do that normally. Bristow does not do that kind of stuff. So yeah, this is something very different for him. I mean, you've seen the news lately where they're talking about now re-domiciling into the United States, and they really, really, really want a U.S. copper asset, a big U.S. copper asset, and Bristow's a risk taker. So, coming in, doing what he did, then staking the 6,000 claims was kind of genius, right? Because he's like, this is a guy, it's like, let's not just make an investment, like let's go after like 13 here, right? This is a belt that these guys have found that, to find something like that in this day and age in Idaho, I mean, like Western US, like everything should be found. So yeah, this was an opportunity that he really capitalized on. So he is definitely, yeah, I've had conversations with him on the phone before, which is just wild to think.
That's a very interesting takeaway. I actually appreciate that. I wouldn't have assumed it went that high either. So it is an interesting takeaway. Chris, I can keep talking for hours. You have a newborn and an actual job to get to. Thank you so much for doing this. I really appreciate it, and hopefully we can catch up again soon.
Yeah, you bet. Thank you, Antonio. It was good.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should, under no circumstances, be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."